Repayment, interest only. Interest only, repayment. Let's understand those two types of mortgages in the UK. How do they work and which one can be better for you in your property investment journey? Stay tuned. If I can change my life, so can you. Subscribe to my channel and I show you how. My name is Fabrizio Cravero and this channel is all about property investment for the UK and overseas investors. If you're new to the channel, please subscribe and let's create a community of investors that grow together. But now, your time is valuable and let's go straight to the point. By disclaimer first, I am not a mortgage broker, I'm a property investor and this video is not intended to be a financial advice. So, I know I have quite a few viewers that are based overseas, and even if you live in the UK, you may not be too familiar with the two main types of mortgages available. Let's start with the repayment mortgage first. With a repayment mortgage, which is by far the most common type of mortgage, you will pay off every month part of the loan as well as the interest. Look at this graphic here. You can see that you won't be paying off the loan regularly and steadily over the years. But at the beginning, with the monthly rate, you will be mainly paying the interest and only a small part of the loan. But as the time passes, then you will pay off more and more the loan until at the end of the terms when you will be completely debt-free. Why do banks offer the repayment mortgage for the home you plan to live in? To let you understand, let's use my case as an example. I am 44 years old and if I get a mortgage for a house to live in myself, 25 years later I will be 69 years old and by then the bank expects me to have a lower income than now and I may only have a pension. Not true, I'm planning my future very well. Anyway, they don't expect that from me and when I will be 69 years old, they think that I may not be able to pay off the mortgage anymore. And because that, the property is not making money because that's the place where I may live in myself. So they obviously play safe and they give me a repayment mortgage. I'm sure that makes sense, right? But now, put yourself in the bank's shoes and consider again my case, but this time Fabrizio, the property investor, borrowing money for an investment property. I know what I'm doing. I'm going to invest only in properties that make money and where the tenant, through the rent, will be covering all the expenses, the mortgage rate, and still giving me a regular monthly cash flow. In that case, for the bank, I'm considered much less risky. Whether I'm 44 years old or 69 or 80, it doesn't really matter, right? As long as the property keeps on making money enough to more than cover the monthly rate. In this case, the bank will be willing to offer me an interest-only mortgage. That means that the bank agreed to lend me money for, let's say, 25 years, and I promise I'm going to pay the interest every month, but I will be returning the amount borrowed only 25 years later. This is the interest-only mortgage. The investor just pays the interest each month, and the entire capital only at the end of the mortgage term. And that's how the graphic of an interest-only mortgage looks like. You can imagine straight away that the monthly rate will be lower because it won't include the repayment of the loan, but only the interest, therefore allowing the investor to have a higher cash flow. And that's a great news. Everyone is very happy to make more money every month. But of course, the question is how to pay back the loan 25 years later. Let's say today you borrow £100,000, which by the way is the minimum amount required by the banks for international investors, for a property worth £135,000. And 25 years later, you will still own £100,000 to the bank. That's what scares many investors, but honestly, not me and not the majority of the professional property investors in the UK, because we know which properties to buy, where to buy, and how to mitigate the risks through due diligence. Look, the £135,000 property will at least double in value in 25 years. That will probably happen much earlier according to the past performances. But let's be extremely conservative here and let's say that 25 years later, the property will be worth £270,000. So, at the end of the mortgage term, you can just sell the property, pay off the mortgage of £100,000 and still have a nice return, even though I have to pay the capital gain tax. And then video on UK taxation coming up soon. Or another option is to refinance the property or remortgage it against the new value. In that case, 25 years later, you will get a new mortgage of £200,000 plus, with which I can pay back the original loan of £100,000 and I have an extra £100,000 to either grow my portfolio or just enjoy life and retire happy. So you can see straight away why the interest-only mortgage is so popular among property investors. Plus, just think about the inflation that recently is going through the roof. Investors, through debt, takes advantage of the inflation, and the interest-only mortgage makes things even better. Imagine what the £100,000 that you may borrow today will be worth 25 years later, and you understand straight away the power of debt. I honestly want to die with as many debt possible. Of course, good debt, those debts that are paid and covered by the tenant through the rent. In reality, property investors won't wait until the end of the term to remortgage the property, because most probably at the end of the fixed term period, the interest rate will go up. And to avoid that, usually property investors tend to fix the rate for 3 to 5 years and afterwards refinance it again, the property, against the new value. All I said so far is already very powerful, but when it is combined with the use of the burst strategy, in which the investor buys cheap and then adds value to the property, all this gives an amazing advantage to the investor. So, the most common strategy the professional property investors in the UK, as well as overseas investors like me and my students, use. Sorry for the interruption, we get back to the video in a moment. You may be planned to invest in the UK, but you live far away from the area where you want to invest in. Or you live overseas like me and you don't know how to do it. I prepared a free training where I show you how you can invest in the UK no matter where you live. Join me in this free training. There is a link in the description below, and I'll let you enjoy the rest of the video. Is to invest only in properties to which there is a chance to add value. Then, through a detailed due diligence, we make sure that the property is located in a good area that has a potential to grow and that attracts good tenants. And finally, we get an interest-only mortgage to maximize the cash flow and the future capital appreciation. That's the strategy that I use myself. I teach to overseas investors, and that safely creates real freedom over the long term. That's just my thought. But what I'm interested in, what's your plan? Are you going to use a mortgage to invest? Are you using a repayment or an interest-only mortgage? Let me know in the comments below. Then check the free sneak peek of my property investment secret course, where I can teach you how you can use the interest-only mortgage combined with a burst strategy to increase your returns. If you gain value from this video, I really appreciate if you can tap the like button, subscribe to the channel, and remember, invest with knowledge, create financial freedom, and I'll see you in the next video.